Okay, we are live here, and I'm with
Hey, Jen.
Claudia Dunsmore. How are you, Claudia?
I'm good. How are you, Jen?
Good, good. Hold on a minute because I want to go live also we're going to stream also on Instagram. So I'm here on Instagram also. But I want to say hello to everybody today. So I'm Jennifer Grinnell. I work at William Ravis Real Estate, and here is Claudia Dunsmore, who works at Movement Mortgage. So welcome. Thanks for joining me today. So
thanks for having me.
Tell me, what are the biggest questions probably that people are asking about mortgages?
So, wow, it's a crazy ride, right? The biggest question this week that I've had is appraisals. What's happening with appraisals? People are offering, $20, $30, $40,000 more than asking, and they're concerned about the appraisal. Is it coming in? Now, as a lender, we don't have any direct interaction with the appraiser, which is good, actually. And, some of the things people want to know is, are the appraisers local? What's taking them so long?
Right.
Yes, the appraisers are typically local, so they know the market. What's taking them so long? Sometimes it's just busy. It's crazy busy. So we want to keep them happy. We want them to, do their job and give us a proper report.
Maybe we could talk about an example here. I didn't mean to cut you off.
No, it's okay.
Maybe we could talk about an example. So let's come up with a price range. House goes under contract. I'm working with the buyer. And let's say it goes under contract. Do you want to say 400 or 600? What do you want to say here?
Give me somewhere between, 450.
There we go, 450. Okay. Well, first of all, let's say that it's listed at 450, and then it goes under contract at 500.
Yep.
Okay. Now, is that something you've been seeing out there?
Absolutely.
Okay.
So I've been seeing it.
So for everybody who's listening, we're talking about you have an offer that the house is listed at 450. So you're hoping to get a good deal. Well, the deal is you're having to pay over the list price of the 450. So now one of the things that needs to be done, most people, if they're getting using a mortgage company like yourself, Movement Mortgage, Claudia, then part of the process is we get an appraisal, meaning the bank is looking to find out how much the property is worth. So it's under contract at 500. However, what if it's only worth 480? What do we do now?
So going in, buyers need to join in. So what do we do now? You have to be prepared to come up with that difference. So my suggestion is, so I will qualify a buyer at the maximum possible price that they can afford or are comfortable with.
Right.
The comfort is also, are you willing to let go of a house for $10,000, $20,000, $30,000, more? And, you have to be comfortable with that payment, but also, are you going to be okay with somebody else getting it for $20,000 more? And what I tell people is, think of this: every $10,000 more in purchase price is only $50 in a payment, in a monthly payment.
Right.
So if you're overpaying by $20,000, are you okay with paying just another $100 a month? And,
right.
You have to decide that. Now, if the appraisal comes in lower, you also have to be prepared to come up with that difference. And people are doing that. And the other thing is that I haven't really seen too many appraisals that are coming in low, because the other thing that's happening is that now this flurry of activity that has seriously not stopped since last year is there. So the comparables are there. The comparables are recent ones, and they're supporting the prices.
Okay, so let's say that, again, the list price was 450. The buyers decide to put an offer in, it gets accepted for the 500.
Mm-hmm.
Let's say that the appraisal did come back at 480. We are now 20,000 difference here. So again, I can tell you what's been going on a little bit. I don't know if you want to shed light on that. So if it does come in lower, because sometimes it does. So we're in a contract at 500. However, it's 480. What happens now?
So now you go back to your agent and you decide, and the seller doesn't need to know what the appraisal comes in at. The buyer does. Typically, the seller does not know that unless you share that information.
Correct.
But if it comes in lower, you're probably going to share that. You either decide, yes, I'm going to go up to, X amount. I believe you call it an escalation clause, or
yeah. So basically, with that situation for myself, just talking about like what we would do. I mean, so now we've under contract at 500. The bank is only saying they're willing to give 480. There's a $20,000 gap there that either needs to be paid by the seller, or it needs to be paid by the buyer, or paid by both. And I've been in different situations. I'm on both sides, matter if I'm on the selling side or the listing side. And that is that the actual buyers and the sellers have been able to meet halfway, and everybody chips in a little bit money. But in our market, that isn't happening. So we have sellers who are like, oh, well, you snooze, you lose. And a lot of your contracts that we're writing up are also stating that, it's not dependent upon the appraisal. So 500 is the number. And so a real qualified buyer also needs to have a little bit of a deep pocket, because they can then reach into their accounts to be able to come to the table with that extra. Hopefully it's not 20, but hopefully it's only 10.
Right.
But and sometimes the price gets negotiated, but in a hot market like we're in, it's not happening. I mean, because we have people with backup offers on our house. So we have a second in place or a third in place, because we have on such a low inventory right now. So the appraisals have been, you just hope they all come in.
Yeah, you do.
Contract is.
So what I tell people is this, I think the other thing that's happening is that it's so enticing because mortgage money is really cheap.
Right.
So from a financial perspective, or, just from a cash flow perspective, why wouldn't you want to borrow the most you can and keep your cash in your, whatever your, assets are?
Let's talk about that real quick. So I'm working with a cash buyer. They can come up with, let's say, 300,000. So 300,000, which isn't going to buy you much around here today. So let's go a little higher. Let's say 400,000. So I have a cash buyer for 400,000 of what they have. Now, no matter what the contract of what we agree upon, what would you advise? Okay, would you advise them to actually get the mortgage? Because what are the rates roughly now? I mean, I know all the programs are a little different, so it's hard to.
So they're on average in the low threes if you have great credit scores, for 30 years, 15, a little bit below 3. Condos are slightly more, but we're still in a pretty low interest rate.
Very low. So your recommendation for my cash buyer, who, since cash is cheap, what would you recommend? Would you recommend them to get that 400,000 cash and just go to the table and buy something? And I'm not talking about that there's multiple offers, because that would be a whole different story. Let's just say it's just them and they have their 400. What would you advise? Would you advise them to actually get a mortgage or look into that because the interest rates of how cheap money is?
Well, I would say if they could get the offer accepted with getting a mortgage. What I also do is I will call the listing agent and vet that buyer, because I will say, listen, they have the money, and I also do a very thorough upfront qualification. So I already know that they have money in the bank. I already know how much money they make. So, maybe they don't want to give up their cash, but if that is the only way, the other way around it is, yes, they can give up their cash. And, if that's not the issue, but then right after they close, they can actually do a cash out refinance for up to 80% of the value.
Right.
So
that would
you can recoup that cash.
Right. So that would be good for somebody who's not in the multiple offer situation, which is very rare because everything's multiples. I mean, it's a great market.
It is.
I can see it for you too. So,
it's just, it's crazy because so going back to the example of, somebody who has to come up with a difference in the price, they should already know that going into it. So you as a realtor and me as a lender would say, just be prepared because this is a situation right now. How badly do you want this house? Right. And the other thing is, so if you can only afford $200,000, okay, so maybe you shouldn't be looking at houses in the $200,000 range. Maybe you should be looking at houses in the $170,000 range. And this way you have that buffer for you to make the, larger offer without having to worry about where it's coming from.
Yeah, no, that's exactly how I have to play things now. So if somebody is qualified up to 200 or even 225, we don't want to be looking at 225 because with our market, that means you're buying it for 250, 275 because of our multiple offers. So I guess we could have a whole nother session about multiple offers.
Yeah.
But yeah, you're right. I mean, and that's where looking for something at the 175 really secures where you stand for that 120. I mean, for the 200,000.
Right. Yeah. So. And that's what, that's a conversation that you certainly would have with them. And, after you get to know them and what they like and what they've been looking at, you kind of know like, okay, well, this is the most I'm willing to do, but I'm going to have to come down. It's like, you start low. And
I think just our last little tip before we wrap it up, okay, is what I'd like to talk about. The number one thing I need working with a buyer or representing the listing, the sellers, the number one thing I need to really make sure that somebody is qualified. Okay, what is that? What do you do, or what do you recommend to anybody listening now of what they should do for their steps? Because some people haven't done this in years. So it's like, what do I do? So what would you recommend for them to do first, besides hire a professional like yourself or of course me?
Of course.
We do that.
I would say the number one thing is to really have everything ready, have a conversation with a loan officer, and just be willing to do your homework. And whatever is asked for, things are so different than they were even a year ago. People even who have bought a few years ago with all the new, unfortunately, there's been some new COVID restrictions banking wise. And, they check on your employer, not 10 days before you close, but a few days before you close. So, just really get your ducks in a row, put everything out there. I always tell people, just tell me everything. Yes. Because we're going to find out. So anything that's, you think isn't in your records, just have that honest conversation. I'm extremely thorough. I'm going to ask you about your bank statements. I'm going to ask you where the money's coming from, because all those things will put, sort of a hinge in things. And you also want to have a smooth and quick process. And to me, that's also the allure of certain
it just lenders. For me to know that when I have a buyer who's actually truly qualified, and also it's easier too when I'm the listing agent to make sure people coming in my house also are qualified. So let's talk about this real quick. So what's the process with you? Do they just call you up and make an appointment? Or, do you have your app? Or, what's the easiest way of really, do we have to meet and I bring my stack of paperwork, or how does it all work?
So any of the above, my process is, as you well know, I try to be very streamlined. So first I want to have a conversation on the phone I'm of course open to text, email, whatever, but I need a phone conversation so I can really ask all those deep questions. And then I'll guide you to either my mobile app or my website application. It's going to pull credit. It's going to ask you everything under the sun that we will need eventually. So I tell people, you can skip over that part, but if you have it, just give it to me because I'm going to ask you eventually. And then I'll come back and ask you, okay, or tell you, this is what you can afford, and then put you in the right program based on your credit, what your down payment is. Of course, if you're a veteran, put you in a VA program, all of those factors. So, and I'll just look at the best financial, package for you. And most people want the lowest payment with the least amount down, or
Sure.
Whatever the case is. And then we go straight to underwriting. We actually our turn times, we call it our turn times. That means that when your loan is sent to an underwriter, the turnaround time to give you a conditional approval, our goal is 6 hours. And so far we've been able to deliver that. And in great part is because I put in a really thorough loan.
Yeah. And I could give a testimonial on you on that too. I mean, every buyer that I have is qualified and they're ready to roll. And there's some other, unfortunately, lenders that, or even online, you think you can go to, what's that thing called online that people go to? I don't know what it is. It's just horrible.
Well, and the thing about,
we like to make sure that, you put the right information in with a proper company instead of just sort of guessing online. I mean, this is where there's professionals in all our fields for a reason. And to just kind of shoot up the hip, I mean, it's
well, some of those online approvals, the problem with that is that people are putting in the information that they think is correct. Right. As opposed to, there are questions that need to be asked. And like the biggest thing is income. How do you get paid?
Yeah.
In the mortgage world, it matters.
Right.
So if you are self-employed, it is completely different.
Yeah.
Somebody who's self-employed may think that they make, X amount of dollars a month. And the reality is that that's not how it's calculated.
And
so
then what happens, and then you start looking at properties with them and then they think they're actually qualified for something and really they're not qualified. So it's,
right.
As you know, I never worked that route at all. So is there anything else, Claudia, you'd like to say or share with anybody coming to the wrap up here?
Yeah, I mean, I think, keeping to the topic of this week, the appraisals, I have seen them, come in pretty close. I have not seen anything so far that's been off the mark. I've seen appraisers use on average 4 to 5 comparables, which is pretty good. You get a pretty wide range of numbers.
One of my fellow friends here on Instagram, Steve Braze, actually Steve is a good sailing friend of mine, and he runs a Century 21 up in Boston, or Woburn way. And as he said, his comment was, it helps the appraiser to get the pending sales from the other realtors. So that happens too. Sometimes it's important to make sure they are aware of what has been going on in the community, because some of them aren't local. So it's important to help them. So not help them, but guide them, I guess. Guide them. So
you can totally give them comps. I mean, I tell people all the time, I tell the realtors, I mean, I can't, but, and one thing that we do at Movement Mortgage is that we actually, when the appraisal comes back to us, we have an appraisal underwriter that will make sure that the comps are, proper comps, recent ones. So, I mean, I've had a couple of situations where the underwriter will ask, well, why didn't you use this one? Because this one was more recent, which is good. It's a great thing.
Yeah. So, it's a crazy world out there right now, but I guess we should end with making sure that if somebody's interested at all of finding out either 1, what their house is worth, 2, finding out what else is on the market, or 3, just having their credit pulled or to really figure out where they stand regarding purchasing, matter if they're a first-time home buyer, because I mean, you've been working with seasoned people that have bought 20 homes before, and you also work with people that have never purchased. And that's what I love with you, Claudia, is just your flexibility to be able to do that. So I thank you.
Well, thanks.
All the deals you helped me with.
Well, and it helps to work with a professional like you. And I really, it's a team effort, right? So
you have to make sure you have the right team members surrounding you. So it is a cool thing. But well, thank you for your time, and
thank you.
Their comments. Hopefully, people will be able to see how to get hold of Claudia from Movement Mortgage, and she's unbelievable, and she'll help and guide you along the way. So everybody have a great day, and
Well, thank you.
Chat soon. See ya.
Bye.
Okay. And let me